Hello, this is Steve Bigelow with the Candlestick Forum. Good market reversal, uptrend in progress. As we can see, a big bullish harami telling you the selling had stopped. So this was a severe profit-taking area. But when they did the bullish harami telling you the selling had stopped, the further confidence that the bulls are back in control is when they closed it back up above the T-line. Now, this also was confirmed with the NASDAQ bouncing off the 34 EMA and now trading back up above the T-line. The important thing to watch in this market trend is that they can get back above this level. It's not uncommon that when you pull back and come back up, if they do a sell signal before this level, that tells you the trend is over. So right now, the assumption is as long as you're above the T-line, you're still in an uptrend. This has an important aspect as far as investor confidence. The more investor confidence there is because we're above the T-line, the better you're going to find these big breakout trades. This is where we've been making some very good money. This is the advantage of a candlestick chat room, is somebody will identify these pretty quick. And so the rhetorical question is, well, how do you know when to buy a breakout? You buy it here, 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 or here. Because of the simple definition of a candlestick signal, which is it's the accumulative knowledge of everybody buying and selling during a specific time frame, the 10-minute chart is your next step. As long as you see that everything is still trading above the T-line, you can still be buying. Does that mean it will reverse once you buy it? Could, but the result of the daily chart was it was gapping up and there was strong buying. So we could stay long until the 10-minute chart closed back below the T-line. Just very simple candlestick logic. So how do you know this is a pullback ready to close out versus any one of these? If you want more specific time framing, you go to your 5-minute chart. If the 5-minute chart is starting to trade back below the T-line and the 10-minute chart is coming down toward it, if you can see that the 5-minute chart can't get back up above the T-line, that's a pretty good indication they're still selling and the 10-minute chart will confirm. This is not rocket science. This is just the methodology of how investor sentiment works time after time. So we're looking for the strong breakout patterns. Anytime you see a reversal signal and they start gapping it up, expect very strong upside. You can see that over here in NVIDIA. Candlestick reversal signal and they started gapping up. This is the expected result. You've got a lot of strong price movement. This is what we look for as far as candlestick investors, is this type of scenario to put us in the right direction at the right time and give us that much more probability that we're in a strong price move. So if you put 2 + 2 analysis in your visual analysis, like seeing buy signals right smack dab off the 50 and then gapping up through a downtrending channel, that tells you the probabilities of this price move is going to be pretty strong. That's why we made that same assessment on AEMD. There's your morning star signal, smack dab off the 50-day moving average. Stochastics coming up. You're in an uptrend. Now, we had a lot of people in the chat room questioning when it was trading down here, which was a big dark candle on the day, but not a reversal signal. The logic is you have to see it close below the T-line to tell you there's been a change of investor sentiment. The T-line rule is very effective. As long as you can see that it's not closing below the T-line, this signal is still in effect. You're still in an uptrend. So we can see the strong signals. We were shorting Bumble because it was trading below the T-line, but notice where your doji occurred in the oversold area. Confirm the next day, telling you that if you were short, a simple stop loss was right here. Profit-taking stop loss was at the high of the doji. Logic says If you're in the oversold area and you're short, they shouldn't be trading back up above the high of the doji. Now you've got a reversal signal and a close above the T line at the 50-day moving average, and breaking this downtrend, logic just says you're probably wave 1, wave 2, going into wave 3. So as long as you use the T line rule, that when the indexes are trading above the T line, that tells you investor confidence is still in effect. This is what allows you to get into trades that are going to perform a lot better, because you don't have the investor sentiment fear factor out there that the market's selling off. Everybody's confident. That'll be it. We'll see you in the chat rooms.